Let's talk about something that happens more often than people want to admit: pre-approvals that fall apart. And I know that sounds uncomfortable, but it is an important conversation, because in the mortgage industry, a pre-approval letter can carry a lot of weight. It tells the borrower they are ready. It tells the real estate agent they have a qualified buyer. It tells the seller this offer should be taken seriously. But here's the problem. A pre-approval letter is only as strong as the review behind it, and not every review is the same. There is a big difference between a quick surface level look and a true understanding of the borrower's full credit profile. Fast does not always mean accurate. And in mortgage lending, accuracy matters, because when a pre-approval is issued too quickly, without a deeper review, important details can get missed. Liabilities, payment history, undisclosed debt, recent credit activity, credit utilization, installment loans, authorized user accounts, collections, disputed accounts, inquiries, all of those details can matter. And sometimes the issue is not that the borrower is unqualified. The issue is that the borrower was never fully evaluated in the first place. That is where deals start to get shaky, because a pre-approval is not just a piece of paper. It is a professional opinion based on the information reviewed at that time. And if the review is incomplete, the opinion may not hold up. Now let's be clear, a pre-approval is not the same thing as a final loan approval. There are still pieces that have to be verified. The property matters, the appraisal matters, title matters, underwriting matters, final documentation matters. But even at the pre-approval stage, the borrower's credit profile should be reviewed with care, because credit is not just a score. A score gives you one piece of the picture, but the report tells the story, and that story matters. You can have two borrowers with the same credit score and very different risk profiles. One borrower may have a clean, stable credit history with low balances and consistent payments. Another borrower may have the same score, but recent late payments, high utilization, disputed accounts, or newly opened debt. Same score, very different file. That is why professionals have to understand what they are looking at, not just pull credit, not just glance at the score, not just issue the letter and hope the file holds together later. Because when a pre-approval falls apart, the damage goes beyond the file. The borrower loses trust. The real estate agent loses confidence. The seller may question the strength of future offers. The loan officer may lose credibility, and everyone involved loses time. That is the real cost, not just a delayed closing, not just a frustrated borrower. It is trust damage, and trust is much harder to repair than a document condition. This is also why credit reporting accuracy matters so much. If the data is wrong, incomplete, outdated, or misunderstood, the entire pre-approval can be built on a weak foundation, and that creates risk for the borrower, for the loan officer, for the real estate partner, and for the transaction. A strong pre-approval requires more than speed. It requires review. It requires documentation. It requires understanding the borrower's credit behavior. It requires looking at liabilities and asking the right questions. Are there debts not reporting yet? Were there recent applications for credit? Are balances higher than normal? Are there accounts in dispute? Are there obligations that may affect qualifying? Are there payments that need to be verified? These questions matter because mortgage lending is not just about getting someone excited. It is about helping them move forward with confidence. And confidence comes from clarity. Now, this does not mean every pre-approval has to take forever. Speed still matters, but speed without accuracy creates risk. The best professionals are not just fast, they are thorough. They know how to move quickly without skipping the review that protects the file. That is the difference. And that is where real expertise shows up. Because anyone can send a letter, but not everyone understands what needs to be reviewed before that letter goes out. So if you are a loan officer, broker, or real estate professional, this is the reminder. Do not treat the pre-approval like a formality. Treat it like the first major risk checkpoint in the transaction. Because it is. A strong pre-approval helps the borrower understand where they stand. It helps the agent write stronger offers. It helps the seller feel more confident. And it helps reduce surprises later in the process. That is what we want. Not just a fast yes, a reliable yes, because fast does not always mean accurate. And in mortgage lending, accuracy is what protects the deal.